Welcome back to Market Insights by Prakash. The big boys of the market, foreign institutional investors, have been making massive moves, pulling a staggering 49,339 crores out of the market in June alone. But that headline number hides a wild twist. In the first half of the month, from June 1st to 15th, FIIs ruthlessly dumped 63,450 crores worth of equity. Yet, just as the dust was settling, they completely flipped the script in the second half, stepping in to buy 14,111 crores from June 16th to June 30th. Despite that late month buying, this brings the relentless 2026 FII sell-off to a massive 2,74,271 crores. If you have been following our channel, you know we have been breaking down this data every 15 days across March, April, and May. Tracking these footprints is the best way for investors to decode the smart money sectoral rotation. And if you have missed any of these breakdowns, the links to all our previous sectoral rotation videos are right down in the description. In today's video, we are unpacking the complete FPI activity for June 2026. We are going to map out exactly which sectors they dumped, where they are secretly parking their cash, and what this critical data means for the market going forward. Let's dive into the numbers. But before going ahead, our analytics show more than 90% of our regular viewers aren't subscribed yet. Hit that button now to subscribe and support Market Insights by Prakash. Now let us break it down sector by sector. First, the sectors they exited. 1. Oil, gas and consumable fuels. FPIs are dumping oil and gas equities at a brutal accelerating pace since the start of US-Iran tensions. Total outflows hit a massive 28,646 crores for CY 2026. The clear trigger: volatile crude oil prices, West Asia crisis, and OMC margin compression. 2. Autos are one of the most heavily owned and highly liquid sectors in India. When high US bond yields triggered a massive broader exit from Indian equities, FIIs used auto stocks as an ATM to pull cash quickly. FIIs have sold a massive 10,368 crores in June alone. Total outflow by FIIs for CY 2026 reaches 30,885 crores. 3. Profit booking accompanied with sluggish Chinese demand and falling global LME prices, metals and mining sectors saw profit booking of 9,093 crores in June in comparison to buying of 6,697 crores in May. For the CY 2026, total inflow still stays at a strong positive rupees 12,821 crores. 4. The persistent 34,247 crore FII outflow from the Indian IT sector in CY 2026 is driven by factors like generative AI disruption, tactical capital rotation, frozen tech budgets, US trade and visa headwinds, macroeconomic pressures, and valuation correction. 5th, June month saw heavy profit booking in power sector for the second consecutive month post January 2026. June saw selling of 6320 crores. Still, it remains one of the sector that has shown positive inflow for CY 2026 with overall inflow of 965 crores after metals and mining and capital goods sector. 6. FMCG. Foreign money is aggressively fleeing the FMCG sector, with total offloading for CY 2026 hitting a heavy 27,170 crores. Volatile crude oil prices since February 2026 and high energy costs are driving relentless inflation, directly crushing the everyday consumer's purchasing power. 7. Capital goods saw massive pre-summer inflows driven by India's infrastructure cycle. By June, the sector traded at a steep premium. FIIs used global volatility to take profits since stock prices had run ahead of earnings. Heavy profit booking of rupees 4,028 crores was seen in capital goods sector for the first time in CY 2026. It has remained the most heavily invested sector with inflow of 21,154 crores for CY 2026. 8. El Nino, monsoon risk, earning revisions, and pricing constraints due to energy shock and margin squeeze continues to affect construction materials sector. Selling in this sector continues by FIIs and they have offloaded rupees 3,076 crores in June. Total outflow by FIIs for CY 2026 reaches 9,668 crores. 9. Healthcare sector continues to remain under pressure due to premium valuations. Total outflow for CY 2026 stands at 20,938 crores. On the flip side, FPIs emerged as net buyers for 1. For the first time after February, FIIs became net buyers for financial services sector. FIIs bought net 3,371 crores in June alone. This is attributed to policy reforms boosting macro confidence. The overall outflow for this sector in CY 2026 remains at a huge 1,11,455 crores, contributing more than 40% of overall selling done by FIIs in CY 2026. 2. As global risk eased and oil stabilized below $80 in late June, FIIs aggressively bought the dip in capex stocks. This swift accumulation highlights Indian construction as a long-term structural anchor for institutional portfolios amid broader market de-risking. FIIs bought 2,881 crores in June, whereas the overall outflow for this sector remains at 3,603 crores in CY 2026. For more data-driven educational content like this, like, share, and subscribe Market Insights by Prakash. I am Prakash Choudhary, a NISM-certified research analyst. Thank you. See you in next video.